Hello and welcome to Commodity Ki Pathshala presented by NCDEX IPF Trust and Moneycontrol. And our theme for the conversation today is the commodity trading, the next big thing for investors in 2021. But before we get there, you have to take a look back at 2020 because that has divided the time period or world perhaps in two. It is pre-COVID levels and then it is right now. And the markets are looking at the vaccine rollout, even as that has been slightly slower, but it is already about on what levels we are right now, what are the volumes and participations, and how the world has changed. One thing is for sure that we've seen commodities come to the mainstream. We have seen gold make all-time highs, silver make all-time highs in Indian markets right now, and the kind of participation, the portfolio diversifications that we've seen coming for commodities clearly have been on the positive side. And then there are stimuluses which will perhaps continue for this year as well. We have seen the US dollar weaken. There is a new president taking over in US. So the world is changing as we know it. Between all of this gloom, it was agriculture, a sector that not just saw good sowing, a very good harvest, very strong export numbers as well. And when we talk about the commodity derivative market, well, we have seen new initiatives, new products and instruments come here as well. We started index trading in the previous year. We've also seen option on goods. The FPOs, the instances that we've seen from there also have been very encouraging. So with a backdrop of all of this, what is in store for 2021 is what we will discuss with our esteemed panel. We are joined by Mr. Kapil Dev. He is EVP and Head Products and Business Development at NCDEX. We're also joined by Mr. Narendra Vadwa. He's President CPAI. Sunil Katke is Head Commodities and Currencies at Agri-sector Limited. Also joined by and IFL Wealth. We also have with us Kunal Shah, Commodities Research, Nirmal Bang. Gentlemen, hi, thank you so much for joining us. Sunil, let's start with you. And how would you look at 2020 if you had to summarize that year in sense of participation and the new instruments? How would you put that?
Hi, Manisha. I think 2020 has been a year with lackluster. A lot of bad news was there due to the COVID, but in the meantime, we were able to see good performance in the agri-sector. I think most of the sectors were not performing well, and that's when most of the countries' GDPs were supported by the agricultural sector. And if I talk about the overall development of the agri space in India, I can say that the agri sector has actually grown during the pandemic in a decent way. And we have seen a record, Kharif harvesting happening there. We have seen record Rabi sowing happening there. And we have also seen some improvement in overall agri-export numbers. In terms of agricultural, overall, if we see, India ranks second in the world in terms of the farm outputs. And if we also talk about Indian export numbers, we stand number 15th. So 2020 hasn't been very bad in terms of the agricultural sector as such. We have seen, decent consumption because in bad times, people tend to stock a lot of, consumables and food and grain items were consumed in a decent way. And that's why we were able to see some positive moment in its contribution towards the GDP. If we talk about investors, how they have benefited from agri-sector in the year 2020, whether agri-sector has managed to give them recent return. If I would like to highlight few of the commodities, from pulses sector, if we see, Chana has actually given 18% return in the year 2020. If we talk about refined soya oil, we have seen 31% return coming in from that segment. Mustard seed actually has outperformed all the commodities, and we have seen 43% ROI coming in from that segment. And likewise, I think oil seed complex, if we see, soybean also has actually managed to give double-digit returns, close to 14% return. So from an investment point of view, agri segments have actually done well. And especially if we talk about derivative segment from agri perspective, people have actually managed to make the most of the digital transactions that they were able to do. The physical participants were also actually making the most of the digital platform that is available. And I think the introduction of new products like options in goods delivery, that is something which is going to add value to a lot of participants, because now there is a product that actually provides an option for people to hedge their price risk. At the same time, they can actually convert that option position into a delivery. We had earlier options contracts that were kind of converted to future contracts, and then it used to go to delivery. But direct options in good contracts were kind of the product that the market was looking at. Overall, if we see 2020, the markets have been good, especially the agri segment has been good. Apart from the gold and silver rally that we have seen, I think most of the agricultural commodities have actually done well. And even I think with the vaccine coming in from most of the countries, that we are expecting good numbers in terms of export orders that we are expecting as we move ahead. So all in all, from global perspective, the commodities, especially the agricultural commodities, have done well. The prices have actually touched reasonably well. From domestic perspective, I think most of the commodities have actually managed to give decent return. And pick of them, like I mentioned, mustard seed has actually managed to give that much return. 43% kind of return we have seen. And being Indian, because it is an agri-based country, more than 50% of the employment is kind of coming in from the agri sector, and overall agri segment as such contributes close to 17 to 18% of the overall GDP. I believe we actually have huge scope as we move ahead, and I think 2021 is going to be a decent year from agri perspective, if we see. And new products coming in from the regulator, from the exchange on the derivative front is actually going to add value, and we will see more and more participants coming in and actually using this segment for investment purpose, for trading purpose, and the price risk mitigation purpose as well.
The one word that you missed perhaps is hedging, Sunil. That's yet another thing. And Kapil, why don't you take that ahead? I mean, we know that institutional participants also have come into the market in 2020, as we saw. What has been their participation like? And with the kind of products that, as an exchange, you brought into the market, what is the initial feedback?
Thank you, Manisha. And first of all, I wish a very happy new year to all of you. As Sunil mentioned, 2020 has been a very active year as far as agriculture is concerned. We have seen highest output of commodities. Various commodities now we are in a position to, feed the world. Even if we have seen sugar now going out from country, we are in position to, we are the largest exporter of rice now. We are in capacity to supply almost 10 million ton of wheat. Of course, prices parity need to be looked upon into. But if you see in the last 5 years, we have seen India from a short country to a surplus country in most of the commodities except oil seed. And now I think looking at the way the productivity of country is increasing in next 2-3 years, India is going to be next global supplier for the commodities in the world market. So that is something which is very interesting going to happen in next 2-3 years. And yes, during the COVID, we have seen commodities trading very stable, especially agricultural commodities. I will talk about, we have seen trading very stable, not here globally on the commodities. Two, three points I would like to discuss why commodities are going to be very interesting and how do we see as an exchange. So first of all, if you see, commodities are a very important, economic activities, commodities trading, whether it's manufacturing, whether it's any other industry. The ultimately, if you deep down and go to the basic, you will find the commodities behind every company or every scrap being traded. We are seeing the impact of steel prices and steel scripts right now. What's happening? We have seen sugar policies, how that have changed and impacted the prices of sugar companies in the equity market, and vice versa for various other commodities. So commodities play an important role. They have a direct and indirect impact on the performance of various other economic indicators. Inflation is one, and policies related to commodities is second. Food security always remains a major concern right now. We have been seeing in last 2-3, at least in 6 months, that how the global economies are looking to first prioritize their food security and then maybe the next other thing. So that is something which is going on. Commodities as an asset class, if you see post 2002, continuously we are seeing this market is growing globally. And I think this is a matter of pride that Asia now contribute maximum number of contracts being traded in the global market, and the Chinese growth story is not hidden from anyone. And we have seen how commodities market have quickly grown up. So, and if you look at the reason how these markets have grown up, so if you look at the US market, This is majorly, if you, and especially in the US market, if you see the most traded agriculture futures like bean, corn, and wheat, and if you look at the report which the CME published, 50-60% of open interest and participation is contributed by the institutional participation, which are three categories: the commercial trader, the merchant, and the institutional participant, the hedge fund and mutual fund. And if you see, last two category had been missing from the Indian market. We haven't seen institutional participation into the commodities derivative market because they were not allowed. Now, last year we have seen, I think that long void and gap we have seen in the market is going to be filled. We are seeing missing pieces getting plugged in, and that will definitely change the way the market is being traded, the participation, liquidity, and volume in derivatives market. Second, if you see, the most important part is going to be participants and the commercial user of that commodities who use this market for price risk management. So if you see the Indian derivatives market, maybe only 1% and 2%, the value, various commodities, including agriculture, directly are actually using these tools for price risk management. But now looking at the volatility, what Sunil has mentioned, 40% in non-seed, at 30% in the gold and silver, and across all these commodities have been trading in last 6 to 7 8%. So I think the need of risk management is quite relevant now, and consolidation which is happening at the ground in agri, in the processing sector, in the manufacturing industry, the size and the risk on the prices is increasing slowly and gradually. And I think these people now have to look upon that how to manage the price related risk. So that is something which slowly and gradually, definitely we do see that more and more people and more industries coming in and using derivatives market for price risk management. And third, of course, FPO. Now we have the most important basic unit for agriculture is the farmer. And we have seen in various global markets that farmers are actively using, and they're using successfully because of various reasons. They are big in size, they have that kind of land holding, and they have corporate farming culture. But thankfully now with FPOs, we are seeing that kind of practices being built in Indian agriculture marketing system. Farmers are using derivatives market, they are delivering, and the kind of push and focus government is giving to FPOs. We are hopeful that the number of FPOs trading into the derivative market is going to increase sharply. So we do think that by all these missing pieces, and that will definitely help market to grow to the next level in 2021.
Sure. Well, absolutely. I mean, you laid out a lot of spheres here, Kapil, on how the markets are being used by FPOs, by institutions, by corporates as well. And yes, we did see all of that happen in 2020. Let me come to you now, Kunal, and you're the person who's on the road right now. But we also saw commodities come mainstream. People, who weren't earlier talking about commodities started saying on how they need to be part of your portfolio, not just gold and silver, but in various other agriculture commodities, soft commodities as well. We saw global instances on how soybean prices and palm oil prices, sugar, rubber, wheat prices were making all multi-year highs. There were crop concerns, there were weather concerns, etc. So yes, commodities did get to be talking a lot in 2020. Especially with the pandemic, people were not talking about luxuries and other markets, but commodities, yes, at all times. How has 2020 changed the way people look at commodity trading?
What we've seen, we commodity is a cyclical asset class. What we have seen over last so many years is that whenever there is a massive infusion of liquidity, commodity tends to perform better and tends to give a better returns to the investor. So this year also is same. We have seen all the commodities, all the agriculture commodities. I mean, when we talk about commodity, generally people talk about gold and silver. But apart from gold and silver, the real returns, what we saw, the way soya oil, the way CPO prices, the way soya bean prices, the way all the oil seed prices have shot up, the way cotton shot up. So this was basically a year of this was the year of agriculture commodities. So we have seen extraordinary return coming out of all these commodity. First, Apart from that, this is the year which reminds me of 2007. This is exactly same thing happened 2007, 2008 when there was a subprime crisis, and after that the Lehman crisis. Agriculture commodity at that particular year also exceeded the expectation and shot up sharply. So this year also we are seeing the same. When the paper currency loses its value, prices of agriculture commodity and all the commodity and hard assets tends to move up. So this 2020 is the year of commodity, and I think going forward, this theme is going to continue. We are going to see significant amount of money flow, money chasing this agriculture commodities. So in 2021, we structurally still remain bullish on a lot of these agriculture commodities, and we are of the view that even though some of the commodity may be having a surplus or glut right now, but the prices are not going to crash. We are going to see small correction in bits and pieces, but the trend is definitely going to be on the bullish side. As far as India is concerned, even in India, we have a record produced, like Kapil pointed out. But then too, I mean, people talk about returns of gold and silver. What about the prominent agriculture commodities with a decent volume, providing you 40 to 50% return in a span of 4 to 5 months? So slowly or gradually, people must realize that apart from the gold, silver, and the metals, the agriculture commodity and the index also, the NCDX, which NCDX has come up with the index. So agriculture index has also given a handsome return of 20-25%. So now the time has come where people should consider even agriculture commodity as an asset class rather than just the hedging tool. Generally, on NCDX, we've seen people hedging their own goods. But I think the time, even the funds will start exploring these opportunities going forward. And the future looks very bright, 2021, and we remain bullish on broader agriculture commodity for the year 2021.
All right. Well, yes, people are learning, and commodities for the longest time wasn't what we saw in the Indian markets being traded quite easily. But every year that we cross, every year that we see new participation and new instruments coming in, and the way the global influx has been, it clearly seems like that we're learning quite fast here. Peter, let me come to you, and we keep talking about the non-agriculture commodities where we are majorly price takers. But when we talk about the agriculture commodities, and this is something we've spoken earlier as well, on how the prices for agriculture on the exchange are treated as a benchmark when it comes to international people, importers, exporters, and for the international markets as well. How do you look at fast forward 2021 on how we are going to be making prices here? Are these benchmark prices, is something that we will continue to establish here? And how are you looking at 2020?
Well, thanks, Manisha. Yes, it's been quite a roller coaster ride for the commodity markets in 2020. But as things stand, if you go back in time and see as to when the commodity exchanges in India was set up way back in 2004-5, so we have almost about a 16 years track record. And for any developed ecosystem, you have to go through the ups and downs in order to mature a market. And now, after all these years, and after SEBI becoming the regulator of the commodities markets, we are very, very sure that not just for agriculture, but even for non-agricultural markets, just like you have the Dalian and the SHFE in the Chinese markets, which are more or less a benchmark for agriculture as well as the base metals contracts. India can plug a very, very vital role in that ecosystem as well. Already, when you see some of the flagship products that NCDX has, including the Chana contract or the RM contract, are very unique in the way they have been constructed, in the way they fill in the gap of having a protein, or rather a protein substitute, a vegetarian protein substitute, a pulse which is traded on the domestic exchanges. You also have the cotton contract in India, which is doing very good. And you also have the RM seed contract, which is a very unique contract specific to India itself. Now, when you see the finer nuances of these contracts and you see the promising nature that they have in terms of getting the world markets to have a look at it, to benchmark it and use it for their pricing mechanism, there is a gap that exists where you allow for foreign participants also to come and access these markets. And although the regulators had allowed for a category called eligible foreign agents. This category was, I think, permitted way back in end of 2018 or so. But if at all, there are some further relaxations along with what they have allowed for the financial institutions to participate. Then we will definitely see a little bit of movement coming in from the Eastern market or the Western market. Whoever has the ability to participate and come and participate on the Indian exchanges, and that will be the game changer. That is where you truly are able to create an Indian benchmark, which you are able to then promise to the world, saying that, listen, you can come and trade in India, although in a limited way, and the prices here have then a much more global acceptance in the world market. So these are the list of things. I'm very happy with the way the regulators have created the ecosystem, and we definitely will roll out for a global integration of the commodity markets in India.
Fair point that, and we are hoping that we see all of that in 2021. Mr. Wadhwa, let me come to you, and you're sitting in Delhi, and that is where all the policies get made. We've seen plenty of that coming for 2020. What is the sense on how will we look at commodities as a class 2021? It's also the time for budget, so perhaps we're looking at more policy movement and conversations. Okay, looks like there is a connectivity issue with Mr. Wadhwa there. We'll try and get him to log in yet again. But Kapil, let me come to you. And when we talk about the agriculture commodities, what also you have to keep an eye on is the policy part of it. How are you looking at? Yeah, Mr. Wadhwa, can you hear me? No, looks like we still are trying to establish that connection. But Kapil, you take it away and you tell us on how the policy measures really do impact agriculture as a commodity asset class.
Manisha, I think agriculture and government policies go hand in hand. We have seen in last 15 years multiple instances where government policies have directly or indirectly impacted how derivatives are being traded. And there are little concerns from the market as well that these markets are very sensitive towards the government policies. Anything can happen on the government policy side. Commodities itself are sensitive because of its wide connect they have from the Indian population, and we have seen that's happening frequently. But thankfully, post 2015, as Viral has mentioned, various measures are being taken where stability to the market is being provided by the government and by the regulator, and I think that is very crucial for the development of derivatives market. On the policy side, Indian market always has remained, especially agriculture market, driven by the government policies. We have MSP in 23 commodities. We have now seen increasing government participation in the physical market, and of course, once they buy, then they dispose of, and they have their own mechanism to dispose of, which has the direct impact on the physical markets. In a way, government is now another important stakeholder in the physical market, which has changed the trade dynamics, and that I think has created a lot of confusion among the trade market participants that how government is going to behave. First, it was price stabilization. Now it's price support. Now I think government is struggling how to liquidate the excess stock which they are carrying at this point of time. So these are some concerns which always there in the market and impact the trade practices in the physical market and impacted the participation psychology as well while they are trading the futures market. But on the other hand, we have seen agriculture reforms. Government is giving a lot of push to coming up with the reforms which at least provide a solution to all these small issues, whether it's Farmer Trade Promotion Act, whether Essential Commodity Act, which has been a major challenge for the growth and development of derivatives market. We have seen various stock limits coming in, various knee-jerk reactions for the government, sometimes state government, sometimes central government, which has impacted participation in contact, and even we have seen contracts going out of the derivative market. Sugar is the best example we have seen in recent past. So I think government is trying to minimize their presence In last economic survey, if you see, it was clearly mentioned by the RBI that role of government has increased up to an extent that private traders are now thinking to stay away from the market, and that's not a sustainable thing for any of the market that private trade is going out. But I think with these reforms, what government is pushing, a lot of things will be settled out. The complexities of market, which we have various market, various tax structure, various rules and regulations, various documentary thing you need to do are now going away. With ENWR coming in picture, a financial player can buy ENWR with a click, and then they can hedge in the futures market. Then WBR as a regulatory is coming in. Standardization of commodities happening now. We have FSI and AgMark getting things standardized at the ground level. And of course, the ease of doing trading out through online platform, various online platform, which is coming up. So I think all these things are helping people, especially non-traditional agriculture participant, the financial player sitting in Mumbai or in Delhi or some other part of country want to trade in agri, but were not trading because of all these things. And now I think these things are going to settle down and they will be seamlessly trading in agriculture market like they are doing in any other financial instrument. So these policies are definitely going to help and will give a lot of confidence and boost the participation in the market.
Oh, well, absolutely. Mr. Wadhwa, since you're back with us right now, what is your sense on what kind of policy changes, especially during the budget, can we see? I know we keep wanting to do away with CTT at all times, and we've been asking for that since 2013, 13 since it came. But what are your expectations in sense of policies, reform? Of course, Kapil listed out quite a lot on what has come in, but there is a lot that we still are desiring. Mr. Wadhwa, what is your sense on the policy front going forward? All right, looks like this connection is something that we'll have to keep working on. But let's fast forward and steer this conversation clearly to 2021. And Kunal, let me come.
Budget.
Yeah, Mr. Wadhwa, yes, please go on. Mr. Wadhwa, can you hear me? All right, I think we will keep trying that until we get him and get him to answer our questions as well. But Kunal, let me come to you. And, I purely want to take the discussion now to 2021, or what are we expecting from here on. So what, according to you, would be important, relevant factors that you will want to watch out for that can impact commodities in 2021?
I think the major factor is the policy of the central bankers going forward. So there is a consensus that the easy monetary policy by Federal Reserve and the various Western central bankers will continue for next 1, 2 years, 3 years. That is a kind of consensus which is built in the market. But if the inflation starts shooting up, what will happen? So I think the most important factor to watch out for is what is happening on the policy front, and that is going to determine outlook of all asset class, including the agriculture commodities. Another thing, weather uncertainties. One should monitor what is happening on the weather front, and I think that is also going to provide big trigger. So last year we had a good monsoon. This year we don't know, so that is something one should watch out for going forward in 2021. But it seems that at least for the first half of the year 2021, this onslaught of bull run is going to continue in the agriculture commodities. We are not going to see any major crash or any major correction. Small bit of correction can come, but the trend for commodities and sectors like oilseeds continue to remain positive. The sectors such as cotton, kapas, sugar seems very positive to me. And even chana, we have a bumper crop this year. So prices may ease during next 1 or 2 months. But I think I'm not expecting any crash even in that, because the global supply will continue to, put the upward pressure on the prices going forward. So if you ask me one commodity which is looking very, very bullish to me going forward in the year is the soybean. Soybean, I'm very bullish. Already it is up, but I'm expecting this year it is going to provide fantastic returns to investors going forward.
All right, so that is the place to be in. And as Kunal mentioned, the stimulus measures from the global central banks will continue. And that means more stimulus will drive the agriculture commodities as well on the higher side, as we have seen in the previous year as well. Keep an eye out on weather, which we always do when we talk about agriculture commodities. Dollar movement is going to be yet another thing. So yet it promises to be yet another eventful year as far as agri commodities are concerned. Sunil, let me come to you. And, we're leaving a pandemic behind. We haven't left it behind as yet. We still are on the higher numbers there. But how has that changed the way we look at commodities, the agriculture commodities especially, and how will that continue to impact the trades in 2020? Sunil, can you hear me? Doesn't look like. Veera, let me put that question to you. Why don't you answer that?
Can you, sorry, Manisha, can you repeat the question? I think.
I was asking you on, while we are coming back from a difficult year 2020, what is the pandemic impact that you will continue to see in 2021 when it comes to agri commodities?
Well, I think it's been a spectacular rally in this market. 2021, there would be a little bit of skepticism, especially because you are seeing a lot of free money chasing very limited opportunities, even in the commodity space. I think someone mentioned at the start that the time that we are is resonates with the period of 2009 to 2011, and it seems as if all these timelines are getting more and more concentrated or in a shorter duration period. So there could be a significant amount of pullbacks in some of these commodities as well. If at all, there is some movement on the dollar index, and there could be a steep correction in this market. So it's been a dream run in the pricing side of it for a lot of these markets. Yes, there could be some concerns on the weather side, which could propel the market higher. But it is one of those periods where everything and anything that you touch is almost feeling like gold. And this kind of enthusiasm typically also results in a little bit of a mass exodus as and when the prices start correcting. So I do believe that we have to be cautious in terms of the overt enthusiasm with respect to the prices. We are seeing a very, very lopsided trade on the short dollar contract, and that could be a cause of concern, which might derail the spectacular bull run that we have. Having said that, again, a lot of analysts and a lot of market participants view this rally in the commodities market slightly differently. And I think one of the reasons why all of us on the commodity side would need to be bullish is the fact that the world actually has not seen much of an inflation in the last decade, and that could be also because of the monetary stimulus which was unleashed in 2008 actually did not go to the people on the consumption side, but it went to the banks. This time, with the fiscal stimulus, with the monetary stimulus, targeting the end users, which can create a beautiful cycle of higher consumption leading to higher productivity, leading to higher consumption. So it could be a start of a bull rally, or a multi-year bull rally in the commodities market as well. So it's going to be an interesting time. It is one of those years where you are coming on the tailwind of spectacular price action, but at the same time you have to be cautious with a little bit of a crowded trade thanks to the surplus amount of liquidity in the system.
Oh, well, yes, crowded trade it is, and we've seen a huge run up into the commodities. But I'm going to try one more time. Can you hear us, Mr. Wadhwa, now? All right, doesn't look like that being the case. So, Kunal, let me come to you. So, what are the type of investors who you see actually getting into 2021 yet again? We've spoken about various participants that the exchange is trying to get in, the regulator has been pushing in as well. But with the kind of influx that we've seen in commodity markets, are you looking at newer investors joining in, newer participants wanting to be part of this?
In broking houses, a lot of agriculture commodity perform, but I think the main participation is going to come from the hedgers. I think hedgers are the guys who are going to be very keen to participate in this market because the kind of volatility we have even in the agriculture commodity. So we've seen a good returns in cash versus future arbitrage also in last 3 months. So So hedgers are the one who are going to perform aggressively going forward. Number two, speculators and the new investors who want to participate and try the fortunes in trading in agriculture commodity. I think these are the main participants who are going to be a part of ecosystem, and we expect that volumes to gradually pick up during year 2021.
All right, so that's going to be the new breed that is going to come in. So hedgers is clearly that is going to be on the stronger side here. Kapil, how would you look at 2021? I mean, as an exchange and as an agriculture exchange, as you have come to be known as, we have seen a lot of push here. You are talking to states as well. The kind of, as you mentioned earlier, the kind of farm laws and new reforms that the government is pushing in perhaps opens up the ground way more for you. So, as an exchange, what are your plans now for 2020?
Two, three things, Manisha. First of all, as I mentioned, that now India is surplus country slowly and gradually. So if you look at last 10 years, the population growth remained 1.2%, while agriculture production is growing with 2.1% CAGR. Means we are going to produce more and more going forward, and especially big ticket commodities like wheat, sugar, corn, and rice. We are again reaching back to a level where we are having surplus, and we can be a larger supplier to the global market, which we haven't seen in last year. We have seen last major exports happening in 2012-13. We have seen wheat import happening in 2016, 15, 16, and now we are sitting on the surplus. Even we have explored pulses export this time, I think, in multiple years. So I think India is going to be an important trading destination for agriculture commodities. And once that happens, that brings a lot of dynamism in the prices and trading practices, and of course that lead people for the risk management. So those set of participants which we have been seeing missing because of export and import is not that active what it used to be. Those are going to come back. Second, of course, institutional participation we have discussed about, and I think all the requisites which are needed to get them and get them comfortable are now available. The rules are being relaxed. Market is more easy for them. DMWR is coming up. So that's the second thing. Those participation will definitely going to see a huge jump into 2021. Third, of course, volatility has remained a very attractive features of these markets in the last 1.5 year with commodities definitely giving huge return more than 20% in various commodities, and that is followed by volatility of 25-26% in various commodities, which is almost on the higher side in last 5 year average. If you see, that will attract, of course, other retail and speculators, which Kunal has mentioned, because volatility and return definitely attracts wider set of participants. So that is going to come. Farmer is the last who are definitely slowly and gradually increasing. We have seen FEMRA scheme by NCDEX supported by SEBI, where they are locking their prices for their crop 5 months in advance with the support of exchange and regulator. I think that is something which is going to be crucial going forward, where farmers will start using modern market-driven tool for their profitability, ensuring their profitability and lock their profit. And we do see various other agencies coming and supporting farmers in locking their prices using derivatives tool. And of course, the last piece, which is bank, who are actually the credit facilitator to all the major things, but not right now not pushing on the price risk management and hedging. Now with SEBI push and RBI pushing companies and the listed entities to disclose their risk exposure to the derivative market in their balance sheet, that will definitely lead these listed companies to explore derivative market for price risk management. So I think all are going to come in, and yes, while this is an opportunity for us as well, I think this is a huge opportunity for our business partners like brokers and members. If we see today, Manisha, the penetration into rural and semi-urban, which is mostly agriculture market, is very less. Only 10% of workforce of all the members who are operating in the financial market are based at rural and semi-urban, except bank broking who have the penetration. I think with these initiatives, we will see a lot of new client and participants coming from urban and semi-urban area, and I think it's a business opportunities for the members and the brokers as well.
Well, absolutely. All stakeholders can make use of this, and why not? And as you rightly mentioned, that it's a market which has been quite volatile. The volatility has been the highest in many, many years, and sometimes the trend is trend, sometimes it's a trader's market as well, and you perhaps can make money apart from hedging your resources here as well. Mr. Madhva, we finally have you here. There are various asset classes and commodities, as I have been talking about, is in the mainstream now. There is a lot of conversation around this. What is your sense on commodities being a part of portfolio? What is also your sense when it comes to, the policies around commodities and especially agriculture as a sector? Mr. Vadva, you perhaps are muted. We can't hear you.
So, to continue with my earlier narrative, I think
Sure.
I was discussing about three P's, which used to be mentioned. We used to mention for expanding the markets, whatever markets are there. For commodity markets, I think three P's were mentioned. These are policy, product, and participants. I think we have mentioned it a number of times that everything is intact, and now we foresee that the markets to expand exponentially. See, we have seen 2020 as a COVID year, and we used to say that it is BC. Like earlier, we used to say before Christ. Now we say it's before COVID and after COVID. Now the after COVID things have emerged world over. India has been taken as a part of the major supply chain, and commodities are going to play a crucial role. Before COVID, we used to talk about 5 trillion economy, and mind you, for 5 trillion economy, so 40% of the share will be from the commodities. So there is a huge opportunities, and investors are realizing this after the run up of equity markets. Now people have started coming to us, and what next they say. So commodity is going to play a crucial role. Say in this direction, commodities are basically for hedging, and why commodities exchanges were created in 2004 was because of the hedging and to take it as a asset class. I think time has come, and we should see that this segment of the asset class emerges into 2021.
Mr. Vadva, we also are just around the corner for the budget as well. So when it comes to commodities and derivative markets, what are your expectations? Because you have been making some representations to the finance ministry also.
See, all these years we have been saying that cost of transaction in India is too high. So we talk about Atmanirbhar India, trade in India, but what is lacking there? Why people are not trading here and hedging in our browsers and going to the international browsers? So cost of transaction is a major part. In this year's submission also, we have focused on that cost of transaction cannot be high if we want our trade to come back to India, and you want people to hedge in the commodities. So earlier years we were mentioning about hedging, and though no data was available that who all companies are there who are going to hedge in Indian markets. So they made it compulsory in 2021 that all listed companies have to compulsorily declare that how much they are hedging in Indian brokerages and how much they are hedging in the outside exchanges. So these figures will come, and will come to know that how much of the business is going out. So for Atmanirbhar India and Trade in India, our major submission was to cost of transaction. We want CTT to be go away. That is the major component of the cost of transaction. We have requested SEBI also just before joining this classroom, the Pathshala. We were having a discussion with SEBI chief and SEBI ED, and they are also on board with us that CTT should go and cost of transaction must go if we want the hedging to take place in Indian exchanges. So I am quite hopeful that the government is quite open to listen to us. We had a pre-budget meetings also with the Ministry of Finance, and they are quite open and taking it openly.
All right. So we really hope that if there is such high hope, then we perhaps will see a movement in that area. There is also a question which I'll take right now. This is from Preeti Garg, and she wants to know all these farm bills and farm protests that we are seeing. Will that in any case impact the commodity prices? Until now, we haven't seen that happen. But Kunal, why don't you take it? How much of an impact have we seen of that right now? Because that hasn't clearly impacted sowing or the harvest numbers.
No, so far, thankfully, that has not impacted the production, or it has hampered the logistic in certain parts of our country, but the production has not been hampered. So I think going forward, if we hope that this there is a solution in this, the protest is not continuing. But as of now, we have no empirical evidence which indicates that this kind of protests have led to any sharp spike in prices. So in future also, I'm not expecting that any of the commodity will shoot up because they are not going to do the sowing, or they are going to hamper the harvest. So that has not happened, and I think that will not happen. So not much impact on that, we think.
Mr. Wadhwa, since you are in Delhi, and this is a question I was asking you initially also, that it's not just about the policies, but you are perhaps in the thick of that farm protest and etc. Also, what is your sense on where the policies could really go forward when it comes to when it comes to commodities as a space?
I think our government is quite proactive and bringing all the policy initiatives which are required for growing the agriculture sector, especially. And I think this was three bills were outcome of that only. Although there are a lot of protests around Delhi and because of these bills, I think, but government should and is taking a lot of efforts to make farmers understand that this is for their benefit only. And in last few years we have seen FPOs, various participants, and if agriculturists and farmers participate through these organizations, what we have seen in this case of Amul, we can see it in the case of other products also, agri products also. So I see if we are able to make farmers understand and the benefit of these bills going forward, farmers will benefit, and our commodities market, especially that whenever there is a integration of spot market and derivative market, everyone in the ecosystem will benefit from it.
Hmm. There is another one. This is from Ashish. Please suggest the name of. I'm sorry, I couldn't get that. Let's put that again. Please suggest the name of some books that can be referred for gaining knowledge on commodity market. Kapil, why don't you take that up?
Yeah, there are various, I think, literature available right now online. So there are various courses I would suggest rather than book, which offers, depending your expertise and your knowledge about the derivatives market. So NISM runs various courses, NISR run various courses, NSC there are various modules, and Exchange also provides various literature and books on this website to understand about the commodities derivative market. NICR is our research a subsidiary who are mostly into knowledge and awareness creation. They have various books available, basics of commodities derivative market, various module on the derivatives market, which can be used to get the basic knowledge of derivative market.
All right, Ashish, that was a good question because that's a question I think we get asked very often everywhere we go. Even in my office, when people are reporting and writing on commodities, this is something that they always ask for. Thank you, Kapil, for answering that. So, I'm at the last round of my questions here, and let me start with you, Mr. Wadhwa. What is your sense on 2021 when it comes to commodities as an asset class? How do you look at the participation here? You came out with those three P's right now. So what is your sense on how much can we scale it up? Because we've seen the previous year give us better participation, better volumes, more instruments as well. What is it that this market requires right now, and how much can we scale it?
Going forward, I foresee great future for commodities market, as all the participants and speakers have mentioned. Word over all the central banks have pumped in and printed a lot of money. So it's a natural commodity is a natural hedge whenever there is a printing of currencies. This year only the US has printed 5 trillion worth of currency, which is against an average of less than $1 trillion per year. So people will find a good place to hedge by investing in the commodities market going ahead. And people are quite literate, gone are the days when people used to enter the market without studying. Now new generation, they come to the market after studying everything, as you have just mentioned, and there is a curiosity to learn the derivative market and other market. So going forward, the Indian investor will benefit from the commodities market, and it will be a natural hedge.
Yes, there is better awareness, there is more research, and there's a lot of money printing happening in the global markets, and that is going to be few of those points which are going to help commodities as an asset class as well. Kunal, what is your sense? What is that thing to look forward to in 2021? How do we scale up what we have? What more is desired from the exchange, from the regulator, in sense of reforms as well?
I think one of the points I will completely agree with Badwaji is the lowering of the commodity transaction charges. I think that is very important in order to get the volume. So generally, people say that we don't have volume, but what is the reason uh, behind the low volume? So I think the moment we drop the charge in line with the international practice, there will be surge in volumes. There will be a lot of participants who will be willing to take up a position on the exchanges, and the volume on the exchanges will increase. Another thing which is required is the institutional participation, and that is only going to happen aggressively when they see the liquidity. So I think once the transaction taxes are lowered, I think the major problem of low liquidity will automatically get resolved in a matter of 3 to 6 months itself. So this is something I would also feel that the regulator and the government should also think about.
Mm. Viral, what is your sense? I mean, we've talked about investing, hedging, trading, the farmers' participation when it comes to commodity markets. Yeah, what is your sense on how can we, encourage it? What is the instruments that are working right now? What are more instruments that the market needs right now? And what are global learnings that we are willing to take from you?
Well, quite interestingly, from a wealth management setup that I represent, 2000 or 2020 was the year where organically you saw a lot of clients wanting to start doing some allocation and start shifting a part of their portfolio into commodities, purely from a portfolio diversification perspective, as well as the understanding and knowledge that commodities tend to outperform at this point in time. Now, the problem is that in India, we have very few products that we can actually market it to a wider set of clients. Especially we just normally have the futures contract. But we have actually now started seeing indices being launched in commodities, and we've also started participating on the option segment as well. But these are our building blocks. What we need to now see is the growth of institutions. So already we have seen some mutual fund schemes which have started participating in commodities, which is very, very positive. But at the same time, we will, as intermediaries, as financial market participants, and as the entire commodities ecosystem, we will have to develop new set of products, whether it's market link structures, whether it is ETFs for passive investments in commodities, or whether it is money that is linked to a commodity index. So there is a lot of product innovation that can happen organically. And like I said, as a fraternity, we all have to work together collectively to ensure that we capitalize on this opportunity. We have been part of the commodities ecosystem for more than 2 decades now, and this is the most opportune time for us to now bring together various investment products to the market participants and really develop this market ecosystem.
So, Viral, what is your sense? I mean, what has been the feedback in 2020? Because we did see numbers increase here. It's been better than in many, many years. What is the market feedback that we're working with right now?
Well, the feedback is positive. Like I said, people are getting to an active allocation on the commodity side. Especially on the precious metal segment, there are various products. There is a sovereign gold bond. There are ETFs. There are futures contracts. Unfortunately, not so much on the agri side. So all you have is the standard futures products as such. But people do want to participate in commodity arbitrage strategies, especially because the debt market doesn't yield anything, and people want to have an allocation to that. There were ghost of the past with the NSCL scam, which happened way back in 2013. But people want to have a relook. There is a deep understanding that SEBI is the regulator for the commodities market, and there is a renewed sense of optimism. So I personally believe that, like I said, the exchanges, the clearing corporations, the brokers, the wealth management companies, the banks, everyone has a role to play in developing this ecosystem. As Mr. Wadhwa said, and I completely agree that the cost of transaction in India is significantly higher. So if you lower the transaction cost, if you increase the commercial hedging program, so the actual producers and users of the commodity to be on one side of the table, then you will have a lot many participants who are willing to take the risk onto the commodities markets, and we would act as a bridge between the both of them. So there is a lot of things that we as an ecosystem could do.
Well, Viral, there are 10 million people in India who are right now trading in Bitcoins, and there is no regulator, and there is least amount of awareness or research into that. So agriculture as a space, I think, has a lot already being played out or spread out into the markets. It's all about getting the right kind of people in, ensuring that they make money, hedge. I'm assuming the numbers is going to be quite huge on what we are looking at in cryptocurrencies right now. But let me come to you then, Kapil, and why don't you sum it up for us? What is your sense on going forward from here on what we might see going ahead? You did talk about banks being part of it and the farmers also, various stakeholders here. But where is the push that is needed to ensure that we can make a big mark when it comes to agricultural commodities and derivatives?
Yeah. So first thing, Manisha, as I mentioned earlier as well, that in the global market, except China and Korea, these markets are driven by institutional participants. Even in US, content like soybean and corn and sugar, around 60% open
अरे वो मैंने
interest by
HDFC
only.
लिमिटेड से मेरे एजेंट के थ्रू हाउसिंग लोन लिया है, तो मुझे मालूम नहीं HDFC बैंक और लिमिटेड अलग अलग नहीं है.
I think Kunal, you need to put yourself on mute before we know alone. So we have seen these institutional participation giving a huge boost to various developed market, and that is something which we do see going forward. And once we talk about institutional participation, new tools like Viral has mentioned, ETF and passive investment, that also bring a lot of qualitative research to the ecosystem, which we have been seeing missing from this commodities derivative. Yes, there are various research houses, but those are very limited to the clients. But public at large is not as much updated and having quality research like they have in other instruments. So I think that is another important thing which is going to get a huge boost by having next level of institutional participation, because they have very well established research institutes. They have research team, there is a dedicated team. They have a modern tool to analyze various research, global fundamental factor, global demand supply factor, and provide a right solution and information to the masses. So I think that piece also going to get thing. And yes, the banks, which we have been talking about, the push from the banks and regulator, because agri, if you see that the contribution of agri into the GDP is 15 lakh crore around, which is 15%. But if you see the priority sector lending is equal to the GDP contribution to the agri, which is around 15 lakh crore, and 10% is the NPA, which is continuously the maintaining its level, and maybe attributed to the various volatility. We have seen few of the leading industries going out market because of not having the price risk management in things. So bank definitely pushing hard, SEBI is also pushing hard, and these markets were built for price risk management. That's the basic function of this market. Rest are secondary. And derivatives market globally are being used for risk management, nothing else. And of course, other people comes and trade various strategies. So till the time the primary user of these commodities market doesn't come, start using them efficiently, I think growth is always questionable. But now we do see that's happening because of various push by the exchange. A lot of awareness programs are being done by our broker partners, CPAI, PhD chambers, and we are seeing the similar kind of push from the regulators, the banks, and even from few of the ministries who are actively looking out the risk management policies of various organizations. Even the government is looking out now to be participating in the derivatives market for all the exposure they have in the physical market. So I think that is going to be very crucial and hopefully very positive for the derivatives market.
Clearly would be. So while 2020 was anything to look at, 2021 promises to be a very strong year, a promising year rather for the commodity markets there. And as all our experts have said to us that they are expecting high liquidity, there is more research, there is more awareness, there is good participation now coming in. Of course, price discovery, risk management are still the themes that we're talking about here. And you have to have that real participant, the hedger, the stakeholder to be coming into the markets with a more strong enthusiasm to be able to part of this space. We of course have seen more instruments and products being launched into 2020. We are hoping that the exchanges, and Kapil, this one is for you, that we see more products and more participation coming in from the exchange as well to ensure that the commodity markets continue to be quite robust in this new year as well. But with that, with all those technology challenges that we've seen here, but we've gathered a lot into this panel today. Gentlemen, thank you so much for joining us and giving us a sense on what the new year could be looking like when it comes to agriculture derivative commodities there. With that, thank you so much.
Thank you.
Thank you.
Hello. Hello.